Hello, welcome to the Global View on this Thursday. I'm Andrew Gagan. Good that you can join us again here at AusBiz. So let's get across what we saw overnight. A negative lead on Wall Street as investors worried about a deteriorating US fiscal outlook. All three major Wall Street indices, the majors there, closing with their largest losses in a month as Treasury yields spiked on concerns that trillions of dollars will be added to US government debt if Congress passes President Trump's proposed tax cut bill. Among the Mag 7, Alphabet was higher, but we did see some falls for Nvidia, Apple and Tesla. Shares in retailer Target dropped after it slashed its annual forecast due to a pullback in discretionary spending, while home improvement retailer Lowe's posted a smaller than expected fall in first quarter sales and hasn't ruled out the possibility of price hikes on some items due to tariffs. Zoom raising its annual revenue forecast as it benefits from hybrid work trends and the integration of AI into its products. United Health Group falling on reports that the healthcare conglomerate secretly paid nursing homes thousands of dollars in bonuses to help cut hospital transfers. And semiconductor supplier Wolfspeed plunged following a report that it's preparing to file for bankruptcy. Meanwhile, Morgan Stanley has upgraded its call on US equities to overweight, saying despite unprecedented policy uncertainty, the global economy is still in expansion mode, albeit with slowing growth. Well, a number of hardline Republicans in the US House of Representatives are holding out against President Trump's tax cut bill, concerned it doesn't sufficiently cut spending, with negotiations continuing at the White House. This as the US Treasury Department saw soft demand for a $16 billion sale of 20-year bonds, with investors concerned about the increasing debt burden that Trump's tax cut bill would deliver. Yields on the 20-year debt rising after the auction to 5.12%. That's the highest since November 2023. The yield on the 10-year note reaching 4.6%, the highest in 3 months. And the US dollar extended losses against most major currencies, the Aussie trading at 64.3 US cents. And Bitcoin hitting a new record high, now approaching 110,000 US dollars. Oil prices have eased after Oman's foreign minister said a fresh round of nuclear talks between Iran and the US would take place later this week. Prices had gained earlier on US intelligence reports suggesting that Israel was preparing to strike Iranian nuclear facilities. Brent futures down more than 0.5% to close at $65 a barrel. Copper was up 0.5%, iron ore little changed, $100 a tonne. And gold continued its recent ascent, up 1% to $3,313 an ounce. Let's get across what we're seeing, particularly with the focus on US markets. Ira Epstein joining us from Linn Associates. Ira, welcome back. So where are we at with that negotiations over President Trump's so-called big, beautiful bill? Why the holdout from those Republicans?
Yeah, well, remember, there's different groups of holdouts. One of them got resolved with what's called the SALT part of it, which is able to take, if you make under 500,000 US dollars a year as a married couple, or 250,000 as a single person, as long as you don't cross that threshold, you're able to declare your mortgage rates and your tax, your real estate tax, as part of the deduction to that up to $40,000. So they got that through. They're getting through car loans. They're getting through all kinds of things. But now you get to the ultra conservatives. And they weren't interested in that in the same way. They're interested in seeing that we start addressing this terrible budget deficit. And the battle there is this. Trump ran on a policy that he was going to make America great again by bringing business back, by expanding the economy. He didn't say anything that I recall that he was going to cut expenses right away. In fact, that wouldn't work. What he's got to do is bring everything home via the Doge, which is the cutting of expense in a degree of the different government offices, then moving on with the tariff revenue that he's going to get. And then the big part is he's counting on the tax savings that Americans would get to spur on spending, to spur on growth and get corporations going. To get there, you're going to have bumps in the road. And this is one of those bumps in the road. No matter what the House, though, does, it goes to the Senate. It'll be butchered up then again. It'll go back to the House, and they'll finally find something that will not be whatever comes out right now.
I pointed out there that poorly received 20-year note auction. What did you make of that, and where are those yields going at the moment?
They were terrible. Okay, I would rate that a very poor auction. We really had to kick up yield in order to sell well over the 5% area. The problem is, the big buyers, Asian buyers and the like, they can get in their own home now over 3%. They don't have to deal with worrying about currency conversions and things of that nature for long periods of time. They can buy it in their own currency, and that is taking some of the buying away. Plus, the psychology of the moment is poor. And psychology is often more important than reality. Right now, people don't know what to make of the tariffs. They don't know what to make of Trump. I would not want an invite to the White House. As you saw today, the South African president reminded me of Zelensky. He sat down and all of a sudden he was beaten up, whether the facts are right or not, about the genocide of white people in South Africa. I frankly don't know. But again, when the lights go down and you start a video as the president did, it can't be a good thing. And it wasn't.
So, Ira, what are markets wary of if this bill from Donald Trump passes in its current form then, and given how that's going to add to the debt position? I mean, obviously we've heard from Moody's, the last of the ratings agencies to downgrade US sovereign debt.
Right.
Where does that place, particularly from an investor perspective, of what the concerns are more immediately, and then I guess focus further over the horizon?
Well, a couple of things. Number one is the dollar falls for the commodity markets as a whole. This is bullish. If you believe inflation in the United States is going to pick up, then you want to own gold. And you want to own Bitcoin. Now, as you know, in the last show, I had told you I was out of the gold, got out of it via my recommendations quite a while ago. But I said to hold on to the Bitcoin. And Bitcoin, as you saw today, hit a new all-time high of over $110,000 a coin. And what I like is the IBIT, the Bitcoin Trust. That is the vehicle I've been telling my investors or the people to follow. Let me put it that way. My recommendations, because I put them out every day. Where you go with this, I think, is the inflation story is not going to go away for a while. You probably have to get through that, believe it or not, the rest of the year. At best, we're hoping that we get something done before August on this tax bill, the budget and everything. They've got time. They want to get it out of the House, and they certainly want to get it done earlier rather than later so the president isn't saddled with this. But any way you go about it, the proof is going to be in the pudding. More trade deals have to be made. We need to see that the path the president is taking this, not only the United States, world economies on, because everybody trades with the United States and we are the reserve currency, that he's doing the right thing. Long term, I think he is. But getting there is going to be a bumpy road the rest of the year. And as you know what I said last time I was on with you, I'm not looking for new highs in this stock market off of this right now. It could come, but I'm not expecting it right now. Rather, I'm looking for the market to have to consolidate. The monster run it's had since April 7th, almost straight up. You don't just keep going to the sky. Now you've got to get a little real and see where it's at. And how do companies do? We're going to get jobless claims again coming out. We're going to get PMI numbers. The Fed is locked in. They're not going to do anything in June. I think there's a 4% probability that they'll make a move in June. So you're really looking at the Fed backing off, and even the 2-year note has been going up because of that. So you've got to deal with this. Keep in the back of your mind the word psychology, because you're going to go through a couple of phases to get to where we have to be.
Meanwhile, on the earnings front, Ira, we've heard from the retailers. Just had Target out as well as Home Depot there. Last week it was Walmart. What are those results telling you? Bearing in mind too, I just saw a post from Donald Trump there having a crack at Walmart saying there's no way they should be raising prices. They should be eating those increases.
He's saying that because they make a lot of money and they pay a dividend. Let's face it, they're not operating at a loss. So he wants them to do their part. If you get in his crosshairs, you have a problem. He's not like any president we've seen. And Andrew, you and I have been doing the show for a while, and I told you when he got back in office, you're going to see a president that lands with his feet, and he's going to run at his policies, not walk at them. I've been right on the money on that. So this isn't over. Will we see earnings eventually get hit? Sure, you will. Are they going to crash? No, they're not. Are we going to see the tech holds up? Yep, you're seeing that. Are we going to see as Tesla? I don't know if you watched the interview with Musk that was on the just yesterday, and he's talking robots will be the next thing, and he's talking millions of robots, and he's not talking years down the road. I believe that he's got the right idea in his autonomous driving. I think it'll be better than Waymo. I've studied the technology. I think he's right there. But there's plenty to do on these markets. And folks, here's what I think. You use this type of break in America you get to buy the companies you want at earnings numbers that aren't insane. And that's how I look at it. I like gold. I think it will again challenge the high, but I don't think it's necessarily right now. The chart pattern came out of the bear trend 48 hours ago. Now the question is, can it hold on? I don't like where the support and the risk to it is. It's probably around 32.85 in the June contract, the support. I think that's a bit high to pay up. So I'm looking at the market sort of sideways. In currencies, are we going to go for the dollar and take it back under 98? If you do, then you have a different game on your hand. You can drop another 8% if that happens. I think you can go towards the 88 to 90 level and that's a big if you can take out that last low and stay under it. I'm not saying it has to happen. I think tonight you flip a coin. Which way does the House vote go in the United States on this tax bill if it is in fact called?
Ira, enjoy the rest of the week. Thanks for joining us on Linn Associates.
Thanks for having me.
Let's turn to the local market ahead of where we're likely to get going. SPY futures indicating will be a negative start there, off almost 1%. So we'll get right across that in just a couple of minutes' time. Stay with us.